Joining us now, Sucharita, Kodali, Forrester Research retail analyst. It is great to have you on. And the most notable surprise, in your view, Sucharita?
Yeah, these numbers were just, as Courtney said, they were pretty strong. And there was almost no metric that really seemed soft. If anything, the top line revenue number was a little bit shy softer than it had been in previous quarters, which may suggest that the consumer is flatlining and getting saturated with all of the price hikes, particularly in sectors like grocery. But to the degree that shoppers are buying at all, it appears to be that they are absolutely buying, and they're buying at Walmart.
Different product mix to some extent, different businesses that necessarily than you see at Target. Do we know about shrinkage and some of the other issues, cultural issues? Did that really affect Target in your view, Sucharita? And it's not affecting Walmart? Yeah.
Right. And we talked about that yesterday, that there seemed to be at least the claim from the Target management that those culture war issues were a big factor in some of their challenges. In Walmart's case, they haven't stepped as much into that field at all. To their credit, it's very difficult to do because there are often sectors of consumers that demand that consumers take a stand, or that companies take a stand. And Walmart has been pretty resistant to taking sides on a lot of those issues in a way that could adversely impact them. Shrink is obviously impacting all of these merchants, but I haven't heard as much about the smash and grab scenarios at Walmart stores. So it's less likely to be an issue. And even overall, shrink has been a factor in the retail industry for decades, and it tends to be a small single-digit percent. I'm not sure that it would really weigh into Walmart's numbers in a quarter like this, so that's not as big of a factor. The bigger issue is that they're so weighted in grocery, and that is absolutely what consumers are spending in. That's what the CFO said that the shopper is buying, is that they are cooking at home and they are purchasing those grocery items, which are those consumables that where the prices are going up.
Sucharita, I did have a chance to speak with the CFO. We asked about shrink, and it wasn't called out in the release because he says yes, and we are seeing slightly elevated areas of shrink, like other retailers, and certainly in certain areas where the prosecution and the prosecution is low, the felony threshold is high. Those are the areas where they are seeing the issues, and agrees it's an industry-wide problem. But I guess what I'm curious about, especially with your expertise in e-commerce, Walmart's U.S. e-commerce sales growing 24%, while Target's fell 10.5%. And as far as I know, that is the worst number that we've seen from Target since they've been reporting that metric. Very strong from Walmart. Do you think that Walmart is taking share online from Target?
Oh, absolutely, Courtney, because the average growth rate right now of e-commerce is in the low teens. So anybody that is growing higher than that is gaining share, and Walmart is outpacing the average growth of the market. It's even gaining share, I would argue, from Amazon, which in North America, from our estimates, is in that low teen number. Target, for whatever reason, is losing share since its numbers are negative. It's unclear why, because its execution has been pretty strong. It's done pretty well through the pandemic, and it has set up a lot of those omni-channel strategies well to capture sales post-pandemic. But it just hasn't closed the deals. And I expect that a lot of it has to do with assortment and the shopper just choosing to purchase in other places.
Can you just talk a little bit more about whether the Fed is, why would the Fed not watch Walmart and just take it to the most granular level to see what to do next? What is it telling us, do you think, about the macro, Sucharita?
Well, I think that what we're seeing is that there's still resilience in consumer spend. There's no question about that. The shopper keeps spending, and they have been spending at record high levels, through the pandemic and certainly following the pandemic. So that suggests that the economy is pretty strong. But I am worried about the sputtering consumer. There was a report from the San Francisco Fed the other day that said that we have probably about another couple of $100 billion of excess savings left over from the pandemic, and the consumer is probably going to spend through that in the next couple of months. If that happens, and then you have all of the student loan payments having to restart again, what we have is potentially a pretty soft fall and Q4, particularly for these mass merchants that are focusing on the average consumer and the consumer that's going to be most affected by those types of metrics. So I'm sure that the team at Walmart is doing the happy dance now, as they should, but they should probably be a little cautiously optimistic for the rest of the year.
What about inflation? Just the second derivative, and they obviously, gasoline and everything else, it can help and hurt, I think, at Walmart. But what are you seeing? Is it slowing or reaccelerating from what you can see here at Walmart?
From what we see, obviously gas prices are down. So it'll be interesting to see what the Sam's Club gas numbers were. They should be in a decent place, given that energy prices are in a better place as far as consumers are concerned. But food has been stubbornly high. And that's that is the biggest area of spend at Walmart. And that is the biggest area of concern for consumers right now. That doesn't seem to be letting go at all. So we need to wait and see what brand manufacturers and producers do with their food prices moving forward. I don't see how the consumer is going to sustain this. They'll trade down or just purchase less in the future.